See, we can look at Tuesday's price action in isolation and say, okay, big day, correction happened. We can look at yesterday's price action in isolation and say, nothing happened. But what is the trend? The trend is that the markets are falling less and they're gaining more. Yeah. That's Nifty for you, right? Similarly, if you look at small and mid-cap stocks, look at the last 4-day change. My producer will just fire it, 1 week change, small cap index, mid cap index. This is yesterday's change, and let's look at the 7-day change. Where is the correction, my dear? I mean, for a market which everyone has been thumping the table and they've been calling out for a bubble, mania, a craze. The market is, the mid and the small cap stocks saw 1-day blip, a deep dive, and they have recovered very smartly. From Tuesday's low, if you add back the comeback in the small cap indices and the mid cap indices, even the railway stocks and the defense stocks, they managed to bounce back. So for the sake of turning bearish, there is no point in turning bearish. We must respect the market momentum. The market is telling you that, look, the bulls do not want to relent. Markets will not go up like this forever, but maybe right now they want to go higher. So if you are watching the screen for the sake of turning bearish, don't turn bearish. There is no point in trying to go against the mob. The mob is literally going to rob you. The best strategy in this market is that now you got to ask yourself very frankly that what is your risk appetite, and you have to be prepared for a 15 to 20% swing at any point in time. If you cannot take that 15-20% swing, maybe mid and the small cap stocks are not meant for you. But if you can digest it, then you might as well be inside the ring. Yeah. The only way you should be out of the ring is that you can't face the heat. If you can't face the heat, then you might as well be inside the ring.
Be inside the ring and enjoy the ride, I guess.
No, I'm talking about arena here, no ride. It's like a gladiator ring.
Okay, but perhaps
it's not as harsh as Gladiator. I just had a vision of all those
By
fights.
the way, new Gladiator is coming. I just saw on YouTube. Yeah.
Oh my god. It's one of my all-time favorite movies.
Yeah, I've seen that movie, I don't know how many
Yeah,
times.
same
Movies
here.
now had it.
Okay, it's going to be anything but a gladiator type of morning, perhaps going by what the rest of the globe is suggesting, because it was a nice welcome move on the upside, a nice winning session that you saw on Wall Street. There you have it across the board, smart gains being witnessed, and that's largely in particular on the back of the extended technology IPO drought that we've seen, and then there was a fresh batch of economic data as well. I'm talking about ARM. That company saw nearly 25% on its debut just yesterday. It opened above $51 per share in the IPO price, only to close at close to $64. So clearly that was a smart mover in trade yesterday. You've got the Asian screen as well, which is piggybacking on that pretty strong momentum. So across the board, you've got the Asian markets, which are holding out in the green, and you've got some key economic data that will be coming out of China. So at least going by that, you've got a pretty strong handover. The dollar index at a 6-month high, Brent quoting at close to $94 a barrel, and the ECB signaling that it could be the end of the rate hike cycle, Nikunj. So we're looking at pretty strong global cues for us this morning, so that perhaps that'll tide us higher.
See, we are in that phase of the market where when global cues are bad, we are falling less, and when global cues are good, we are capitalizing on them. Yeah. So it is just one of those setups in the market where we are not reacting to bad news and we are capitalizing on good news. And that is the undertone of the market. Folks, please remember, it's very easy for anybody to come out and say, okay, markets have peaked out. It's very easy for anybody to look at historical data points and say that, okay, markets are trading expensive. But there is no rule book which says that expensive cannot become more expensive, and overbought conditions cannot become extremely overbought conditions. So don't be in a hurry to say that, okay, this is the red line beyond which I will not go. Global corrections historically, or corrections in India historically, have only happened when there has been a global crisis. 2001, 2008, 2012 and 13, 2020 and 2022. Yeah, that's the time when the war happened. So these are the factors when large reversals in the world has happened, and India in a sense has just cracked because of that. So for sake of turning bearish, there is no point in turning bearish.